Ladies and gentlemen, good day and welcome to Wheels India Limited Q4 FY'24 earnings conference call, hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need an assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Basudev Banerjee from ICICI Securities. Thank you, and over to you, Mr. Banerjee.
Thanks, Manav. Good afternoon, good morning to the participants as per their location. Thanks to management of Wheels India Limited for giving us the opportunity to host the call. We have with us the senior management represented by Mr. Srivatsa Ram, Managing Director, and Mr. P. Ramesh, Chief Financial Officer of Wheels India Limited. Without wasting any time, I'd like to hand over the call to the management for their initial remarks, followed by Q&A. Over to you, sir.
Thank you. Thank you, Basu, and good afternoon to everyone. Thank you for attending our fourth quarter call. The company has actually had a flattish sales, with sales actually coming down marginally to 1,167.46 crores compared to 1,172.43 crores in the fourth quarter of last year. On the profit angle, the net profit was 36.83 crores as opposed to 22.39 crores. Now, when you look at what actually happened for us in fourth quarter actually saw a slowdown in the agriculture tractor wheel business that we had. January, February and March were much lower, and the industry per se actually had a degrowth compared to the previous year. The second segment that was affected was the commercial vehicle segment, where post January, February and March offtake was very, very minimal. So as a result of that, we actually had a degrowth in the domestic business. However, the export business grew, and we did about almost 319 crores of export in the fourth quarter. So the product mix change, moving away from domestic and towards export, definitely did help improve the profits. Also, in one of the export businesses, there was a raw material advantage that we got in the fourth quarter, which we were able to hold on to, and that also contributed to the improvement in profit. So if you look at the businesses in the fourth quarter which did well on exports, construction wheels, aluminum wheels and hydraulic cylinders were the three segments that did well on the export front. On the domestic front, air suspension system for buses did well and will continue to do well. In addition to this, the board has also recommended a dividend of 7.39 rupees per 10 rupee share, and that will be taken up in the AGM later in the year. With that, I have completed my brief. One more comment I would like to make. Another notable change when you look at quarter on quarter is that the machining of large castings, where we had just started we just about started in December, in the fourth quarter of last year. In this year, we had fully ramped up and the volume had doubled. That is a profitable business, and that also contributed to the profit, additional profit in the fourth quarter. With that now, I'm open to any queries and questions that people may have. So I await people to please dial in and ask their questions. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. A reminder, you may press star and one to ask questions. You may press star and one to ask questions. We have our first question from the line of Amit Hiranandani from Smith Limited. Please go ahead.
Hello, sir. Congratulations on the good set of numbers.
Yes. Good afternoon, Amit. Thank you. Yeah.
Yes. Sir, can you just help me with how much is total steel capacity we have and how much is the alloy capacity at present? And if you can give a mix in the revenue also, please.
Yeah, we make multiple products. There's wheel products and non-wheel products to start with. We're also in construction and agriculture tractor, which are not really automotive. So let me just put it this way. I think the aluminum sales, and Ramesh, correct me if I'm incorrect here. The aluminum sales is about 8% of our mix. Would that be correct, Ramesh?
Yes, sir. Aluminum sales would be,
So it's about 8% of our sales, but you have to understand that, for the company, commercial vehicle wheels, tractor wheels, construction wheels, the windmill segment, air suspension segment are other segments which are not all of them are necessarily wheels.
Understood. And sir, so what would be the current revenue potential from the current capacity you have at present?
Yeah. So so based on what we have and what we hopefully will start next month with the second aluminum OEM getting on stream, I feel a year from now we should come maybe just short of double of what we are doing. Right now we're doing about, say, something like 23,000 wheels a month, and we should probably be closer to 35 to 40,000 wheels a month a year from now. I mean, by fourth quarter.
Okay. And sir, on the capex side, so can you help me with where we have spent capex in FY'24 and what would be the annual capex run rate for the next 3 years, please?
So capex in FY'24 was directed at I believe there was some capex towards cast aluminum, more on finishing operations. There was capex which is related to machining of large castings that took place. I believe there was some capex related to commercial vehicles, and I believe some capex related to tractor wheels. This is FY'24. Ramesh, we've spent about, I think, 140 crores, something like that.
141 crores, sir.
141 crores.
Including process upgradation.
So this is also including, upgrading our process, maintenance, everything included. 141 crores. In the coming year, we believe we will spend slightly in excess of 200 crores of capex. And
in which areas we're going to spend?
Yeah, just coming to that. So the areas where we will spend capex, you just before I tell you that, let me also tell you that very often when we spend the capex, the lead time is like 12 months. So, there's a kind of a 1-year lag from spending the capex to actually starting the production in a lot of the cases. So if I look at the 200 crores that we are looking at spending this year, I will say that, there is capex which is related to the machining of large castings. There's some capex towards cast aluminum wheels because, again, this is 26, 27 we're looking at. Some capex on earth moving and tractor wheels. Some capex on hydraulic cylinders. And the balance is just maintenance-related capex.
Okay. And sir, about alloy wheel, how much is the capacity for alloy wheels at present? The car alloy wheels?
So currently, including what is, getting commissioned probably in this quarter, capacity will be about 42,000. You have to understand, for capacity, the capacity of the furnace, capacity of the paint plant is much more. So we just basically add low pressure die casting machines and machining cells, and that makes up the difference. So on an annual basis, we'll keep adding these cells, and I think once we reach about 60,000, we'll be full up, and then we'll have to start a fresh capex cycle, if you understand.
Yes. So, sir, this alloy capacity is on GDC or LPDC?
LPDC.
Great. Just last question on the outlook for the industrial component business and for the exports outlook also, please.
Yeah. So I'll start with exports first. So on the exports front, we expect a flattish year, partly due to the fact that I think relatively the retail related customers who we service have done an inventory correction in April. So the first quarter will be relatively less, but we should be able to make it up. The other point I'd like to mention is that while we have won a lot of business, a lot of that business is coming at the tail end of the year. So it will actually feed into FY'26 much more than it will be full year addition for FY'26, but it may come in only in February. So a lot of the export business that we are seeing is coming at the tail end of the year. So that is the reason why we probably would have a flattish kind of forecast on export in the current year, although the fourth quarter will be better. Industrial products, we do see growth. Machining of large castings, while it may not show as high a growth as we saw last year, because last year was basically ramping up to better capacity utilization levels, and now we're just adding equipment. But there will be maybe about 20% type of growth in that particular business. Hydraulic cylinders, we do believe we can show considerable growth in the coming year, and that's why we're also investing in hydraulic cylinders.
Okay. All right, sir. All the best, and many thanks for answering the questions. Thank you.
Thank you so much, Amit. Thank you.
Thank you. A reminder to all participants, you may press star and one to ask questions. We have our next question from the line of Dhaval Shah from Fort Capital. Please go ahead.
Hello.
Mr. Dhaval, are you there? Mr. Dhaval, are you there? We are unable to.
Hello.
Yes.
Yeah. Good afternoon.
Sir, thanks a lot for taking my question. I wanted to ask what is the export as a percentage of total revenue in last year, FY'24?
Last year it was about 26%.
Okay. And we generally supply to Cairns and Caterpillar, right?
Yeah, they are one of our big customers. Yes.
Okay. And in India we supply to JCB?
Yes, we do.
Okay. And construction, including domestic and exports, is what percentage of our revenue?
It would be if I include in construction, if I also include in addition to wheels, fabrication and hydraulic cylinders.
Mm-hmm.
Ramesh, please correct me. It would be about 22% of sales or more than that, Ramesh?
It's about 24.5%.
24.5%.
You are saying that the things related to infrastructure built out, which is construction equipment, is 24% of your revenues.
Correct.
Of which majority should be domestic, right? Or exports also?
No, export is majority because we are a very large player in the earth mover wheel segment globally.
Okay. And how are margins?
Margins are quite Margins, I would say, are quite healthy, towards double-digit margin overall as a segment. But I would say the fabrication segment the fabrication part, which is relatively smaller, is more a single-digit margin, and the wheels and cylinders are both double-digit margins.
Okay. And a few years ago, I think when our margins were very depressed at around 5%, you had said that, it will take us some time, but we will reach 9%. This quarter, I saw your EBITDA margin was 8%. So will this sustain?
No, let me just explain this. So we actually get some amount of, turnover discount from some of our suppliers. Unfortunately, it all comes in the fourth quarter. So our accounting, we tend to account it in the fourth quarter. But I would say probably, 1%, slightly more than 1% will be that. So if you
so you are saying that 7% is a sustainable margin?
Yeah, something towards that, yes.
Oh, okay. So we should not. So how far we are from 9% in terms of time? Because we have to regain 2% margin, right? Based on our aspiration to touch 9% margin.
Yes, we need to do that. We are focusing. So we've been, if I recall, either the last investor call or the call before that, one of the comments that people had made was the manpower cost was running away. So the current year we actually focused on controlling the manpower cost. We are now working on energy and fuel costs, which I think in the current year will continue to come down. This year we are also trying to improve the performance of the subsidiary. While Wheels India standalone has been profitable, there is a loss-making subsidiary. So we are also trying to focus on that and try to bring that to break-even point. These are what we will be focusing in the current year.
So current year we can work with 7% or 8% margin?
I think I really don't want to project numbers, but the lower of the two numbers is what I would suggest.
Okay. And which other segment we are seeing? Because the commercial vehicle, everybody is not very bullish on the first half of FY'25. Even Maruti and Hyundai are not guiding for much higher growth for the next year in FY'25. Some part of FY'25 will also go into election. So I would say that, what kind of revenue growth we can just aspire for? I'm not asking for guidance.
No. So I'll just share with you what our customers have shared with us. You're right, on commercial vehicles, most people feel it will be flat for the year. On passenger vehicles, I think the industry has indicated 5% growth. And on agriculture tractor, which is the other relevant segment, if the monsoons are good as IMD has predicted, then the second half should be good. But the first half is still very, very muted. This is a guidance as far as the domestic market. Air suspension on buses will continue to be strong. We don't see any issues there. As I indicated, construction equipment, wheels as well as hydraulic cylinders should have some growth. So that in a sense, covers where we see growth in the coming year. Okay. So you feel that double-digit growth is something which we can aspire for, but it will be back-ended, second half. See, Dekho, if the economy really steps up and then it will reflect in our customer schedule, then zarur growth ho sakta hai. Abhi jo dikhata hai, wo to, I'm just telling you what I'm seeing at the current moment.
Sure. Okay, sir. Thanks a lot. Yeah.
Okay, thank you.
Thank you. We have our next question from the line of Abhijit Bora from Awberry Ventures. Please go ahead.
Yeah. Hi, can you hear me?
Yeah, I can hear you.
Yeah.
Please go ahead.
Hello, sir. Congratulations for the good numbers.
Thank you.
I just wanted to ask one thing. Where do we stand with our railway plan? Because I've seen on the side that, our railway, we were trying to mobilize the labor stuff, and, the Indian government is very active on pushing, new Vande Bharats and, stuff in this system. But obviously we are right now in the election cycle. So where do we stand on that part?
Yeah, we are not, we are really not pushing railways. We are trying to, if I can just be very clear, barring any residual orders that are there, we are not looking at new business from Indian Railways, but we are looking at, developing ourselves as a supplier to people like Alstom, who then feed into the metro system, if you understand what I'm saying.
Okay. So, again, one more question. So, how are we?
Sure.
So, basically, we are going to be using more of our profit for capex expansion next year, as you mentioned. So, what part of it will be also help us reduce the debt that we have?
Yeah, the debt. See, we've been managing the company for the last, I would say, 1.5 years or so. We've been managing the company based on free cash flows. So essentially, while we have capex plans, they need to be free cash flows that come from the business, and based on that, we've been making investments.
All right.
Of course, there are some commitments, some new businesses which we need to make capex before the business comes.
Yeah.
Which probably on a project basis we could prioritize outside of this free cash flow logic of capex.
Yeah.
But I think even with that, Ramesh, would you like to answer the gentleman's question?
Yes, sir. Sure.
Yeah.
Sir, our free cash flow would cover the capex estimated for FY'25, sir. So in a worst case scenario, the debt will remain at the present level. And if you are able to optimize the working capital the way we are taking the internal plan, we may be able to reduce the debt further in FY'25. And you would have noted in FY'24, we brought down the debt by something like close to 47 crores. So we may be able to do it depending on how much we are able to optimize the working capital and how far is the sales growth and other factors.
Okay.
Yeah.
And now one last question. Where do we stand with the alloy wheel? I mean, alloy wheel have been little slow on that. So aluminum is doing very well. So last question.
Yeah. I'd also answered this for the previous, person who asked the question.
Yeah.
We're doing about 23,000 wheels a month currently, and we expect to do closer to 40,000 wheels a month by March of next year.
All right. Okay. Thank you so much, sir. All the best and looking forward.
No problem. Thank you so much.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. A reminder to all participants, you may press star and 1 to ask questions. We have our next question from the line of Aditya Sen from Robo Capital. Please go ahead.
Hi, thank you for the opportunity. So, how much capex did we do last year, and what is the capex plan for the coming 2 years, that is FY'25 and 26? And will that capex be specific to aluminum wheels or for the other products also, like steel wheels and suspensions?
Okay. Aditya, thank you for the question. Last year we spent 141 crores on capex, and in the coming year we expect to spend slightly more than 200 crores on capex. And in the year after that, we would also expect to spend something similar. This broadly is related to the quantum of capex. Coming to specifics of the breakup, the capex is actually, as I had replied to the first person who asked a query, the capex is related to all segments: commercial vehicle segment, construction, agriculture tractor, hydraulic cylinders, machining of casting, and aluminum wheels. So aluminum wheels, we are right now, I think at least till next year, We are only making the debottlenecking capex in terms of the die casting machines and the machining centers. The paint plant and the foundry are adequate for the current volumes.
Mm-hmm.
The year after, perhaps we may need to make an investment, but at the moment, aluminum is only is not a, I would not say it's a small part, but it's a part of the total package and not the largest part of the total package.
All right. And what is the gestation period? How should we understand the ramp up of these capex? Like the one we did in FY'24, 140 CR. So until when will it start fetching revenue?
So 140 CR, if you look at the 140 CR, it will honestly kind of kick in from June onwards in terms of being commissioned. I would not say the entire 140 CR, but I would say like a significant long gestation period items which were probably ordered in the beginning of the year last year will come into production in June, which is notably related to machining of large castings and aluminum wheels. And the balance will probably come in the fourth quarter of this year.
All right, fourth quarter.
So typically, I would say 12 months. 12 months is probably a good guesstimate of gestation.
All right, understood. And yeah, that was my question. Thank you.
Thank you.
Thank you. We have our next question from the line of Raja Kumar Vaidyanathan, a shareholder. Please go ahead.
Yeah, good afternoon, sir. Congratulations for the good set of numbers, first of all. Sir, I have been listening to the call. So you mentioned that 7% is a sustainable operating margin that we can look forward for the upcoming quarters. So
for the upcoming year, I think this year we are capable of coming close to that, is what I said, yes.
Okay.
And
okay. On a full year basis, yeah. Sir, and in terms of revenue, what is the outlook you have? Do you think the revenue will also be flattish, or that we can expect some increase in revenue top line?
See, we have budgeted a flattish type of, single digit type of revenue growth. But if the market is post monsoons, if the markets are stronger, then our revenue growth will be more. On the export front, the reason why we are kind of flattish in terms of our predictions is because we are on number of platforms which are coming on stream, but they are unfortunately coming only in the fourth quarter. So, which is why we have not actually projected any big growth in export. Although there are significant platforms we are working on, they're only coming in the fourth quarter.
Okay, got it, sir. And sir, any outlook on the subsidiary? Because I see that the losses have come down in Q4 and they have come down substantially. If you read between your Q3 and Q4, the standalone consolidated numbers, I see the 7 crore losses come down to almost 1.5 crores type. So is this sustainable, or are there any one-offs here?
No, we are working on it. We feel that probably by the end of the coming year, we should get it to a break-even level, maybe even earlier, but at least by the end of the year, we are hoping we can get it to a break-even stage.
So you mean break-even for the whole year? Is that what you're saying?
Yes.
Okay.
That's what our attempt is. We're just starting the year, but that is the plan.
Okay. Sir, just a couple of more questions, if I may ask. I was just looking at what are the levers available for, I know the margin you mentioned 7% on an overall basis. So in terms of the levers available for improving the EBT, so it would come more from increase in scale and through the debt reduction, or through if there is any downward movement in interest rates. Is that a fair assumption, or are there any other levers that I'm missing out?
Yeah. So, I would probably say that, there are some segments for the company which are strong in terms of relatively stronger margins, notably machining of large castings, earth mower wheels, hydraulic cylinders, and even air suspension to some extent. So any growth in these segments will definitely improve our profitability. We are also trying to see to the extent to which we can come up with a better, uh, pricing mix of products by which we feel our margins should increase.
Okay. Okay. And sir, lastly, one housekeeping question. So
Sure.
just on this is for Mr. Ramesh. So if you see the cash flow statement for the current year, I see there is a non-moving provision and bad debt of 18 crores that is showing up in the full year cash flow, whereas this item was missing in your September cash flow. So just wanted to know what is this, if you could give some color on this.
Ramesh, you want to take it or I can take it?
Yeah, you can. Okay, sir, go ahead.
Yeah.
I will. Yeah.
So, really the difference is related to we had a distributor of wheels in Europe, and in the beginning of the year, he had actually told us that he's going to restructure his business, and there was a hope that the business will continue. But towards the latter part of the year, it became very clear that he has no such plans. So we made a provision, and we have written off the debt which is due from him, as he's also not made payment for a long period. We followed our debt provision policy that we have in the company. The company has a policy for writing off debtors more than certain number of days. So we're just following that policy. So the 18 crores that you mentioned essentially is covering bad debts, inventories which are beyond a certain period.
Okay. And this was done in Q3 or in Q4, this 18 crores?
So Ramesh can answer that. Ramesh?
Partially in Q3, about 5.7 crores in Q3, the balance in Q4.
Okay. So this will be a one-off item, right? So
Yes.
it's not going to show up in. So this should. So you have done 8% margin despite this provision thing.
Yeah. Of course, we also have the year-end turnover discount, which is a one-time gain we get every year. But yes, correct.
Okay. Okay. Yeah, because your real margin should be then more towards 9 to 10% than the 8 that is kind of showing up, right? So that's what is.
Probably.
So you're a bit conservative, sir, then in terms of giving guidance of 7% margin.
Yeah, we also need to see when we look at aging, we also have a sense of will there be something else in the coming year. We have to provide for contingencies when we are making projections to directors. It's not as if everything is known about what will happen. So we do budget conservatively. If we exceed the budget, I'm sure nobody will complain. But we are following conservative principles. Yes.
Okay. And sir, lastly, given the U.S. elections, the impending U.S. elections, do you think it will impact your export markets for the coming financial year?
I hope not, because U.S. is a significant market for us. Almost 500 crores worth of sale is from the U.S. market. We believe that even if the incoming president is belligerent and puts a duty on Indian products, we still believe that the other country will probably also face the same disadvantage. And so from a relative viewpoint, we may be in the same place.
Oh. And sir, lastly, any asset monetization opportunity that we can look at towards this debt reduction?
I don't believe we have anything. Anyway, Mr. Ramesh, would you anything that you have in mind?
Yeah. I have a couple of comments, sir. One is, if you look at our debt, the long-term debt is about 62 crores. And if you look at the entire debt for that, it is largely the working capital, which is based on the drawing power available towards the receivables and the inventory. So I think, first we don't have an asset to monetize, and the debt reduction would happen in due course with the improvement in the free cash flows. And with the improvement in EBITDA, you will also find that most of the metrics would be in line with the prudential financial principles. It won't be like a situation where we need to really take efforts for reducing the debt.
Okay. And so in terms of guidance, so last year we had done about 122 crores as the interest line item. So do you expect any drop in the upcoming year, or it will be more like a straight line?
The interest on a standalone basis is about 109 crores. Okay.
Okay.
So the interest would remain at the same level, because current year the interest has jumped, because if you recall, in the previous year the repo rate was hiked about 5 times during FY'23. So the full year impact has come in the current year, and that's why the interest has gone up to something like 109, 110 crores. And it would remain with the growth which we are expecting to happen in FY'25, the interest would remain in absolute value at the same time.
Okay.
We also, we are not assuming any interest rate correction and things like that.
Yes.
Of course, if those happen, those are above and beyond this.
Yes.
Okay. Got it, sir. Thanks a lot, sir. Thanks for answering all my questions. All the very best.
No problem. No problem. Thank you so much.
Thank you. We have our next question from the line of Ganesh Shetty, an individual investor. Please go ahead.
Good afternoon, sir, and congratulations for good setup number.
Thank you, Ganesh.
Yeah. Sir, as most of my questions are answered, I just have one suggestion. As our interest cost will remain very high, also the debt restructuring is nearly not possible for us. Can we have some QIP or right issue so that that amount we can use for debt repayment and we can have higher profit every quarter? Can you please throw some light on this, sir?
I appreciate your applying thought towards us and your suggestion, but I think at the current moment, we believe that, we will constantly work diligently on an annual basis and find ways of reducing our debt and improving our profitability. I would rather, if we are going to raise capital, I would rather raise capital towards some major expansion rather than purely debt reduction. At the current moment, there is no such plan, but thank you for your suggestion.
Thank you very much, sir. That's all, sir. Thank you very much.
Thank you. We have our next question from the line of Kiran, a shareholder. Please go ahead. Kiran,
Hello, sir. Good afternoon.
Yeah, good afternoon.
Sir, I have one question. With respect to alloy wheels, from the previous calls, if I'm right, we were doing around 25,000 wheels per month. And in Q4, we were expected to add one more domestic customer. Can you just throw some light on that, sir? Because even in this Q4 also, we are at the same similar level.
Correct. So the new customer starts actually in June. So we've actually already produced, ready to make the first shipment. But I think they will take maybe 1 quarter to start ramping up to, noticeable volumes. So probably, if not Q2 or Q3, we'll start seeing the volume ramp up. But the startup production for the customer starting in June.
Okay. Thank you. Sir, another question related to wind energy segment. So can you just throw some light on what is the opportunity size in the domestic and what would be the opportunity size in the export, like market size, and can you just show where we are right now?
Yeah, see, the domestic market is quite flat at the moment. I don't think there's any significant preference for wind, which is there in government policy. On the export market, we have started supply towards offshore platforms, and it's expected that in the West, the offshore platforms will be a major area of growth. Outside of this, we work with our partner Bater, who makes castings that we machine. And I think as they look at ramping up their India operations, we will also be able to ramp up our machining to match their casting capacity.
Thanks, sir. So one last question. I think we had a plan to increase the renewable energy consumption by FY'26. I think it was around 75% is what our plan. Could you just share the progress and how much cost we would be saving based on this project, sir?
Okay. I will answer it, maybe not exactly the way you want me to answer, but let me answer the question.
Sure,
yes, you are right. We are looking at, increasing the percentage of energy from renewable from 26% to 75%. That is a stated purpose for the company. We have made some headway, but there are a couple of contracts which are probably taking longer to negotiate for us to put in place. So I'll say that let's say roughly about half of what we thought we'll do, we've done, but we're constantly working on other opportunities in which we can ensure that we make up to the 75% level. Other thing that we are doing is that we are working on reducing energy consumption in the company. A couple of technologies that we are adopting to reduce fuel consumption, notably within the company. So it will be a combination of one side, yes, increasing renewable offtake, but B, also what can we do internally to reduce consumption. Combination of these two things will come in. You asked about how much money we will save. All the projects are projects which have decent timelines in terms of payback. They're all most of the projects that we have are within a couple of years.
Thanks, sir. All the best.
Thank you.
Thank you. We have our next question from the line of Ankur Agarwal from RT Wealth Solutions. Please go ahead.
Hello.
Yeah. Yes, Mr. Agarwal. Please go ahead.
हम जो कैपेक्स कर रहे हैं जैसे 140 करोड़ का कैपेक्स इस साल करा, नेक्स्ट ईयर 200 करोड़, उससे नेक्स्ट ईयर 200 करोड़, तो ये एसेट टर्न रेशियो क्या आता है? मतलब इतना कैपेक्स करने के बाद हम क्या एक्सपेक्ट कर रहे हैं 2-3 साल में वॉल्यूम्स?
तो यहाँ पे दो बात है. एक बात है जो जब भी हम कैपेक्स करते हैं वो कैपेसिटी ऑन द ग्राउंड होता है एक साल के बाद. सो इफेक्टिवली अगर आप आज कैपेक्स करते हैं वो कैपेक्स के वजह से सेल जनरेट करना तो एक साल के बाद ही होता है.
अच्छा.
तो ये एक साल का थोड़ा लैग है. तो फ्रॉम दैट एंगल अगर आप देखते हैं तो पिछले साल में जो भी 140 का 41 का इन्वेस्टमेंट हुआ, वो इन्वेस्टमेंट से जो सेल जनरेट हुआ वो तो इस साल में जनरेट हुआ. एंड इस साल में जो हम 200 करोड़ का इन्वेस्टमेंट बोल रहे हैं वो तो अगले साल से आएगा सेल इफेक्ट.
एसेट टर्न रेशियो क्या रहता है? तो 200 करोड़ के कैपेक्स से हमें वॉल्यूम कितना इंक्रीज रहता है?
नहीं. सो उस एंगल में अगर आप देखते हैं जब भी हम कैपेक्स को एकदम बढ़ाते हैं, पिछले साल तो 140 था, उसके पिछले साल भी ऐसे ही था. तो कैपिटल एसेट टर्नओवर रेशियो उतना नहीं बदला. जब हम 200 करोड़ का कैपेक्स कर रहे हैं एक साल के लिए थोड़ा इम्पैक्ट होगा, बट दूसरे साल से इट विल मोर देन मेक अप.
तो आने वाले 2-3 साल में क्या 7,000 करोड़ 8,000 करोड़ के आसपास का टर्नओवर पॉसिबल है 3 साल बाद?
या देखिए ये एसेट टर्नओवर रेशियो इज आल्सो स्लाइटली excuse me, slightly misleading because we are also investing in machining of castings. So machining of casting में ये conversion business है, margin तो ज़्यादा है, but the material cost नहीं है. So you understand the asset turnover ratio will not be the way the conventional business is. Conventional business में जब आप sales को देखते हैं, asset turnover में material cost सब कुछ है. But ये नई machining of castings का business जो है, जो I think पिछले साल में we did about 71 crores. वो 71 crores में material cost ही नहीं है.
ओके
सब conversion है. So asset turnover ratio अगर आप देखते हैं तो थोड़ा misleading हो सकता है.
ओके तो मार्जिन कुछ इम्प्रूव होके मतलब जब ये हाई एंड वाले वर्क रहेंगे तो मार्जिन इम्प्रूव होगा 8-9% के आसपास आ सकता है.
हाँ, मार्जिन तो जरूर इम्प्रूव हो रहा है एंड आई थिंक पिछले साल में भी वो इम्पैक्ट होगा.
अच्छा, क्योंकि पेयर ग्रुप में जैसे स्टील स्ट्रिप व्हील है वो 11-12% तो मार्जिन आता है उनका, तो हम मार्जिन लेवल पर अभी थोड़ा लो है.
हाँ, वो तो ठीक है. हमारा प्रोडक्ट प्रोफाइल इज स्लाइटली डिफरेंट सर. वो तो मेनली एल्यूमिनियम व्हील एंड स्टील व्हील ऑटोमोटिव में है. हम तो कंस्ट्रक्शन इक्विपमेंट में है, विंडमिल इक्विपमेंट के सेगमेंट में है, डिफरेंट सेगमेंट्स में है. वी कम्पीट ऑन ऑटोमोटिव व्हील में कम्पीट कर रहे हैं, बट बाकी सेगमेंट्स वो तो नहीं है उन सेगमेंट्स में.
नहीं तो फिर हमारे मार्जिन बेटर रहने चाहिए ना, जिसमें हमको कंपटीशन भी नहीं है.
नहीं, हम जरूर कोशिश करेंगे जी. आप जो बोल रहे हैं वो तो सही है. हम कोशिश करेंगे एंड आई एम कॉन्फिडेंट दैट 2-3 साल में वी विल रीच द लेवल दैट वी अर्लियर आल्सो कम्युनिकेटेड.
हाँ, क्योंकि पिछले 4-5 साल में कोई परफॉर्मेंस में इम्प्रूवमेंट नहीं आया जैसे आपसे आना चाहिए था, इंडस्ट्रियल ग्रोथ और सब देखते हुए. तो मुझे लगता है आगे 2-3 साल में अच्छा इम्प्रूवमेंट आना चाहिए.
नो दैट आई एम कॉन्फिडेंट वी विल सी एन इम्प्रूवमेंट, बट हम देखेंगे सर, 1 साल के बाद जरूर आप कुछ देखेंगे.
ओके, थैंक यू सर. थैंक यू.
थैंक यू.
Thank you. We have our next question from the line of Shashank Kanodia from ICICI Securities. Please go ahead.
Yeah, hi, good afternoon, sir, and congratulations for the set of numbers.
Hi, Prashant.
Yeah, so just wanted to check, will it be possible for you to share your operating level margins across your steel wheels and alloy wheels?
Yeah, see, alloy wheels, I think because we have a capacity, foundry and paint plant capacity of say about 60,000 a month. We're operating currently at 23,000. So the margin right now is still negative, although in the fourth quarter it improved significantly. That is only marginally negative. But I feel that once we go to the 40,000 level, I think the margins on aluminum wheels will increase. Broadly speaking, steel wheels are, single-digit margins. Construction equipment wheels, hydraulic cylinders, air suspension, and machining of large castings, the windmill related segment, all these are double-digit margins currently for wheels India.
Right. So, sir, between you and the nearest competitor in the alloy wheel space, so is it just the mix of you being low on alloy wheel that is impacting our margin, or are there any other process inefficiencies that you feel that needs to be corrected for us to allow the double-digit range?
No, the product range is very different. He is making about 2.5 million aluminum wheels. We are making 1/10 the volume. He is not making any windmill parts. He is not making any construction related parts. So the product mix is completely different. It's like comparing Tata Motors with Maruti.
Right. So lastly, so next 3-year, 5-year vision, so do you feel that we can be clocking something like 18%, 20% kind of ROC profile, or something like 11-12% kind of margin range? So any sort of vision-wise, let's say next 3 years, 5 years down the line, how do we see that company shaping up?
No, so I definitely am looking at a 15% return on capital employed. I think that is something that we will reach. I know because the 3 quarters of the year were quite difficult. It's only in the fourth quarter that we made some progress. But we are confident that, in a couple of years, we will come closer to that 18% so that you guys also believe it.
Sure, sir. Sure. So thank you so much. That's all from my side, and wish you all the best.
Thank you.
Thank you. We have our next question from the line of Amit Hiranandani from Smith Limited. Please go ahead.
Thanks, sir. Sir, generally you give some segment-wise revenue breakup. So can you please help us for FY'24 PVCV, non-auto, and exports, please?
Yeah, exports was about 26% of sales. The construction business, as Mr. Ramesh had earlier clarified, which is made up of really earth mover wheels, hydraulic cylinders, and some fabrication for construction. All that told is about 24.5% of sales. But the 24.5% also includes exports. The tractor segment is roughly about 20%. CV is about 25%. PV is single digit. The air suspension is single digit, and the windmill sector is also just about maybe 10% of turnover. That's a rough breakup.
Okay. All right, sir. Thank you so much. Thank you.
Thank you.
Thank you. We have our next question from the line of Aditya Singh from Robo Capital. Please go ahead.
Yes, Aditya. Please go ahead.
Mr. Aditya, are you there? Mr. Aditya?
Oh, am I not audible now?
Yeah, we can
Yes,
hear you.
you are audible now.
Okay. So thank you for having me again. I'm asking if you can share the market share details of CV, tractor, and the PV segment.
Okay. So in the commercial vehicle segment, I think we have a 30. So on the CV segment, I'm probably breaking up MCV, HCV, and LCV. Okay. So look at MCV, HCV, I think about 37% market share. On the LCV segment, we have, I think, 58% market share. Tractor segment, we have about 54% market share. And the PV segment, let me put it this way, I think because the steel part is declining, but at the same time, with the largest manufacturer in the country, we have the larger market share between the two players.
In the steel wheels?
Yeah. Aluminum wheels were too small. I don't think we don't really count because we're just starting now. Yeah.
Okay. All right. Thank you. That was my question.
Thank you.
Thank you. We have our next question from the line of Nishant Was from 360 ONE Asset. Please go ahead.
Yeah, thanks for the opportunity. Congratulations, Srivaths, for the results. Just a few questions. Just to understand your opportunity on the railways and wind side on the domestic market. Can you please help us in terms of what kind of turbines are you supplying to in terms of the size, and what can be potentially the content per turbine that you guys can supply currently? And you mentioned that domestic is still slow, but just for our understanding, apologies if this was covered earlier, but the market opportunity as per the end manufacturers is going quite rapidly, touching potentially 5 gigawatt. Right. So are we more in offshore side? That's why we don't play too much in the domestic.
No. Let me clarify. So we started off actually at 2 megawatt. Now we do absolutely nothing for 2 megawatt. We do more of 3 megawatt, 4 megawatt, 6 megawatt, and we've also just started for 15 megawatt, which is offshore. Even some of the 6 also is offshore. So we are in both onshore and offshore. There's a slight disconnect between people who announce parks and the production. So when you hear about people saying they're adding so much capacity in wind, so much capacity, it doesn't necessarily translate into production in the immediate period because this is a capital goods market which has a lead time. So that's probably why you're saying that market may log bolte hain ki it's very good, but at the same time they're saying how come you're not excited about it.
Yeah,
I only go based on schedules that I get from my customers, and they have a pipeline. So it really is related to what is the pipeline of stock that they have and whether they feel they need to ramp it up or slow it down.
So to understand your statement better, is this statement correct that say this is a lead lag phenomena, and if the underlying and manufacturers continue to invest, you will also start to see that benefit trickle to you in similar proportion?
Yeah, I think if you have successive years of rapid growth, then you'll start seeing it reflect in terms of manufacturing.
Okay. And would you be comfortable sharing any market share data with us on this space in the local market? How much would you be able to generally have as a share of business?
No, I think the parts are very, very different. It's not like automotive where it's straightforward and you can say so many wheels or so many suspension systems, because we do a variety of different fabrications on a windmill. All I can say is that in the segment we are one of the leading manufacturers who also exports in sizable quantity overseas. That's all I can say. But we don't have a sense of what is our market share. But for large multinational companies, we are a preferred supplier.
Okay. And second was on the railway side. You guys do the frames and the bolsters. So here, what's the medium-term plan in terms of how do you, because there is obviously a big round of ordering cycle that is happening across the end large customers. So are we participating in some of these opportunities which might fructify over 2-3 years?
Yeah, we're actually not really aggressively participating on the government tenders. We're not entirely comfortable with the system there, but with some of the multinational companies like Alstom, we are trying to become a qualified supplier, and then we will look at that segment.
Okay, so would it be fair to put a 2-year time frame for you to be seeing meaningful revenue from this side?
Yeah, I think so. If we're able to crack it, that's a reasonable time.
Okay. And my last question is, Shiva, you mentioned about the machining mix. So what's your broader target in terms of, let's say, next 2 years out? What would you want the machining mix to be for the overall business?
So the machining is machining of large castings. So we are, adjacent to a large casting manufacturer. So our plans are really aligned with his capacity plans. So as he ramps up his capacity, he has plans to ramp it up significantly. Maybe not double, but close to double in the next, say, 2 years, 2 to 3 years. So as that happens, we will also have to add capacity to match that.
Okay. Thanks a lot, Shiva, and all the best.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today, and I'll now hand the conference over to the management for closing comments.
Thank you so much for all your interest and your questions. We always look forward to interactions with investors and shareholders, as you do ask questions that we don't always think of, and it makes us think in retrospect, and sometimes also gives us direction in terms of the way the company should go. So thank you so much for your interest in the interaction. We look forward to interacting with you and hope that we can continue to perform well and meet your expectations. Thank you so much.
Thank you. Thank you.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect.